In today's video, I am going to be breaking down my favorite stocks to own and buy in September, which is this month. Let's get down and let's check these out. Okay, so the first stock is AMD. This is a very good company right now, mainly because, of course, there is a massive chip shortage and their volume is absolutely going through the roof right now. Now, if you're a dividend investor like myself, you may not invest a ton or even nothing at all into AMD, mainly because it doesn't pay a dividend. However, the growth is insane. I actually owned this company back when it was just over $2 a share, and I sold it at like $6 a share, and now it's worth $109, so I made a little bit of a mistake there. And you can't deny this chart is absolutely ridiculous. Now, it is currently at a little bit of a stabilization point. The reason is because it's just had a nice big run. Now, what we have seen when it comes to AMD is, of course, anytime around earnings, or with the fact that now many other companies or countries are really worried about the chip shortage, we're going to see potentially a lot of money being spent by governments trying to get companies like AMD to make factories in their countries. Now, when we look at their revenue, they have beat 4 quarters in a row, and their upcoming quarter earnings date is October 25th, and we've seen in 2020 that their revenue was not the only thing that grew, it was also their earnings grew substantially, huge percentage-wise versus previous years. This is massive, amazing news, and we should really be talking more about the earnings and revenue. This is absolutely massive. Any company that grows their revenue but grows their earnings percentage-wise higher, that's ridiculous. That's amazing. Also to mention the fact that when it comes to September, it's back to school and back to work for a few people, and let's just face it, anytime that there is a back to school push, there's going to be a need for more processors because there's more and more kids who need to have phones. They need to have computers. They're going to want gaming devices because, of course, it's back to school, and what do you ask your parents for mostly? It's a computer, and why buy that $300 computer when you can buy that $1,000 computer that can game so I can do my homework? So, of course, this is why I think that AMD and also this next company is going to be absolutely massive. And that is NVIDIA. It's actually up today at the day of recording this video, but this one does pay a little bit of a dividend. So if you're looking for the whole chip play on the stock market in September, I would be definitely looking at NVIDIA if you're a dividend investor, because obviously they pay a minute dividend. Now, of course, volume again is absolutely through the roof. It's crazy. And anytime you're seeing this with upwards momentum, it's good. AMD is slightly down today, which is interesting. However, NVIDIA is, of course, huge when it comes to gaming. It's huge when it comes to AI. This is not just a September play, this is a future play as well. When you're comparing, however, the PE ratios between AMD and NVIDIA is at 80, while AMD is at 38. So technically, AMD is a slightly cheaper stock. However, it's hard to say because NVIDIA is technically the bigger name in the group. So you are getting a little bit more of a premium on NVIDIA. Now, when it comes to NVIDIA, we do see a very similar chart. However, it's still in its growth phase right now. Will they have a little bit of a pullback like AMD did? It's hard to say, but the charts do look very promising for companies like AMD and NVIDIA. Something else I really like to see when it comes to dividends is dividend growth, and we can see that there is some slight growth. Of course, this is not a massive dividend at all by any means, but it is still dividend growth at the very least. Now, they are once again blowing out earnings like crazy. NVIDIA's earnings date is going to be November 16th. However, something that I do want to point out is the fact that, yes, they did grow their revenues year over year. However, when it comes to earnings, they are making more money than they did in 2020 when it comes to 2021. However, when it comes to 2019, that earnings is actually pretty well in line. So what does this actually tell us? So what does this all mean? So when you're looking at a company like AMD and NVIDIA, there is a ton of money that needs to be put into research and development. And when I was a kid, AMD was really never known as being a top-of-the-line processor. It was always a cheap, poor man's processor. And today, they have kind of turned that name around. A lot more gamers are looking at AMD as an option, but when it comes down to it, we can definitely see when it comes down to the financials that because the earnings are lower percentage-wise, or at least lower growth percentage-wise versus the revenue, what we are seeing here most likely is a higher rate of investment when it comes to NVIDIA than it does with AMD. AMD is clearly looking to gather more cash, maybe for purchasing other companies, while NVIDIA is most likely investing that money back into their company to create faster processors. Again, there is a worldwide shortage right now on processors, and any company that can say, hey, we got a faster processor, check us out, guess what? They're going to get more sales. So NVIDIA, because they have that more expensive PE ratio, potentially, that obviously the reason there is because NVIDIA is a bigger name than AMD, but also you're getting that premium there, but also more people are looking at them for future growth more than AMD. Next is a Canadian company called Shopify. Now, why would I put Shopify on this list? Their PE ratio is also through the roof versus other companies that do very similar. And of course, their average volume is again going through the roof once more. So why is this all meaning anything? Well, when it comes to Shopify in September, there's actually a very interesting reason why this is good, or interesting to say the least. So first off, we have an election in Canada if you're from somewhere else in the world. And when it comes down to our election right now, their conservatives do seem to be leading in most polls. The conservatives want to really heavily invest in small businesses because there's been just an absolute anarchy when it comes to small business because of COVID. And because of this, they're going to be investing heavily in small business. And what does small business do right now? What do they need to do? They need to get online. Shopify offers websites. They offer the ability for people to shop at your store online. And because of that, if the conservatives do get in, small businesses are going to be getting an absolute ton of money. And because of that, that's probably at least 1% of the reason why Shopify is up right now. But that is the main reason why I am picking Shopify right now, is because businesses need to invest online. There's going to be new businesses that are going to be created whether or not the conservatives get in. And of course, whether or not the conservatives get in or not, there's still going to be some kind of an investment, hopefully, from the government into those businesses. And if that's the case, these businesses need to get online, and Shopify is the main company in Canada to do that. We can see that on the charts as well. This is very interesting because, of course, we had that COVID explosion when it comes to businesses needing to get online. It's slightly stabilized. It hit an all-time high back at the beginning of 2021, and then it kind of stabilized at that same high point. It recently just hit another high point once more, well above $2,000. So, of course, this could be a very interesting company to invest in September for the future. And as we can see when it comes to their financials, they were actually losing money earnings-wise all the time before 2020. However, as soon as 2020 hit, they had earnings positivity and they had massive revenue growth. Now, this is not going to stop anytime soon. This is going to continue to grow, and I'm going to explain that to you right now. Why is this never going to stop? Well, first off, businesses need to be online. They can't just have a brick and mortar store. Nobody's ever going to find them. Number two is because Shopify, they are largely on subscription-based stuff, which means that if they just signed up, let's say 100 different companies, they should be able to keep at least 98% of them on their services, which means that, of course, there's future revenue growth when they start adding on more and more subscription options, but also with a possible conservative government coming in, then there may be an explosion of new companies, because that's one of the things that the Conservative Party is really trying to get a vote for, is they, on their policies that they want to bring in, they want to really promote new companies, giving massive tax breaks and things like that, which then will allow those new companies to invest in their online presence. Again, with Shopify, monthly, yearly subscriptions, it's fantastic. This is going to be a massive company in the future, even bigger than it already is. Now, TD. TD is an interesting one, and so is any of the Canadian banks, and I'm going to explain that right now. So TD and any bank is very interesting because they haven't been allowed to raise dividends for a very long time. And because of this, we are now starting to see that they actually are making a killing, and they usually pay out a certain percentage in dividends, and they can't. So there's going to be either a one-time massive bonus dividend, or there's going to be a massive dividend increase. Whatever it's going to be fantastic. There is not going to be a small 4 or 5% dividend increase once they're allowed, probably next year. There's going to be a massive, massive increase because they're making more money profitably wise right now. Earnings, they're making more money now than they ever have before. So because of that, that is a massive reason why I am saying that they're going to be raising their dividends, not just TD, but all of them. But also, when it comes to, again, the Conservatives, if they get in, which, again, it looks like they have a 4 or 5% chance higher of getting in than the Liberals, what that basically means is essentially the Liberals and the NDP want to add a tax to those banks. They want to add a massive tax to businesses in general, but these two other parties want to add special taxes to banks that make over $1 billion a year, which is essentially 5 out of the top 6. Or 4 out of the top 5, whatever it is. I can't remember my math right now recording this video, but either way, if the Conservatives get in, they don't have to worry about that extra special tax, and because of that, if the Conservatives win, the bank should also do really well. But let's look at TD as it is. They are below my magic point of 10 on the PE, which means that they are a very strong buy in my opinion. Anytime a Canadian bank gets below 10 PE ratio wise, fantastic buying opportunity. Their volume is very, very good right now, and we are also looking at a 3.8% dividend. Meanwhile, they haven't increased their dividend for almost 2 years now, getting very close to 2 years. So because of that, there's going to be a massive dividend increase as well, most likely probably next year. And they haven't done anything for a very long time when it comes to their stock price until just after the COVID pandemic, or at least the downfall of that. They have really exploded to the upside. They're starting to pull back just a bit. It seems to be a very good time to buy. We have to remember that in September, it's actually the worst month on average for the stock market, which means that it's the best time for us to buy. And as we can see here, TD themselves have not raised their dividend since April 8th of 2020, which means that that's about a year and a half now. And by the time that they're going to be allowed to raise their dividend, it's not going to be probably until 2022, so it's going to be a full 2 years. They've also been crushing their quarterly estimates. Their next earnings call is going to be August 26th, which just happened not very long ago. I don't have the numbers on that, sadly. But if we look at their 2020 numbers, check this out. Lower revenue, higher earnings. This is what you want to see. They are cutting costs. They're making more money. This is fantastic news for anybody who has an investment in a bank. And my last company is CNR. Why is this actually important? Well, the Conservatives historically, and this is all based off of the current polling numbers that are coming in, but this is based off history, that Conservatives are generally more into the country of Canada pumping more oil, which then means that that oil has to go somewhere. Right now, we don't really have the pipelines that we need, which means that CNR, like before when we had the conservatives in before, were really moving two main things. One was grain. Grain wasn't moving anywhere because there wasn't enough trains. And two was oil. And because there's no pipelines, or at least very few pipelines, CNR was the one who was really pushing a lot of that oil. And believe me, I don't understand why these environmentalists think that railways are safer for oil than pipelines. Blows my mind, because every week I used to hear every week on the news that there was a new train rollover and oil going everywhere. You don't generally hear that with pipelines. It just confuses me, and that's just me maybe. But either way, let's get back down to the numbers. Dividend is a 1.6%, and their average volume is not too bad either right now. Their PE ratio is around 27, which is around average when it comes to railways. Now, they're not a massive growth story. You're looking at 5 years ago going from $90 to now being worth $150-ish. So the only trouble that you're going to see is, of course, that triple high, but it has had that pullback and it's starting to grow once again. So this looks like a very strong company into the future, not just because the conservatives may or may not win, but they're generally strong altogether anyways. And of course, they just recently had a massive push to the upside, mainly because there was some acquisitions that were not allowed recently, and somehow that just pushed the stock price higher. It's now starting to stabilize. I'm not too sure if there's going to be a downturn, because anytime there's a gap up, it's usually going to be a little bit of a downturn to basically fill that gap. But either way, if you could grab this maybe a week or two from now around 147, it may be a good buy-in. I hope that this video has helped you in your investing journey. If it has, hit that like button, subscribe, and I will see you guys again next time.